In this video, we're going to talk about how to trade trending markets, how to trade trading ranges, and we're going to talk about how to follow price action, because as price action traders, we're following price action rules that will help us to stay on the right side of the market. Now, before I start trading, I'm looking at the pre-market structure, and my goal is to do my pre-market analysis before regular US stock market open, because I want to get the bias down right. And what I can see is that the bigger pattern during pre-market was a bullish uptrend, which had a break, which means according to trendline rule, I expect for prices to create and test the new high. I expect a new high to be higher than the last high inside the channel, according to trendline rule. But notice that never happened and prices reversed back down. So already right out of the gate, I am asking myself a question. Is this a downtrend that is starting to begin and it's a reversing this uptrend, or is this just a correction and this bigger pattern will get new extreme? Because remember, bigger patterns in price action tend to take precedence. So when I'm watching this, I'm already unsure about the structure, because the downtrend is never really truly proven. It can be that this is the first leg down and this is the second leg down, so that would mean that this is just a correction. I can also draw my downtrend like this with the break and a new extreme already, or I can even draw my downtrend like this, a little bit wider, in case I expect a brand new downtrend to start. But even this downtrend was never really truly confirmed. You never really confirmed it, you just pushed through it like it's almost not even there. For that reason, I'm being patient. Bigger bias was bullish, so I'm leaning more towards a bullish bias just slightly. I'm going to wait and see what the EMA does. I have a first entry short, second entry short. And notice, market likes to move in pairs of twos, and this is the first leg up, pull back, second leg up. Uptrend had a break and new extreme, and this is a nice bearish bar at the EMA. And even though this second entry short worked, I'm not really excited about this, because what I already mentioned, the downtrend was never truly confirmed, and the structure looked a little bit more bullish. We never retraced too much of the initial uptrend. So even though this worked before the open, I was patient. But notice what happened. When you're unsure, always follow the EMA. Strong push above exponential moving average, and this was important. This told me that my first idea about potential new high for this uptrend is starting to be valid, and right now we're pushing above EMA, confirming the bullish momentum. EMA keeps holding, so what I'm going to do, and what I did, I found this channel and I'm going to copy it, put it at the top, and I have a nicely fitting uptrend, which means bias right now is bullish, short bias is bullish, and I expect new high for this uptrend. I don't know that we're not going to make it. All I see is this, and I expect new high to be made. I have a new high right now. Because I'm looking for longs, I'm not counting for bottom, I'm counting from the top. So we have a first entry long that failed because it's not a high probability setup. And notice what we have, second entry long. We have a second entry long, two-legged pullback at the EMA, at the proven trend line that is confirmed now. This is the fifth touch, and notice bar looked very bearish, and at the end of the bar, everybody started buying and resulted into nice bullish reversal trap. This was my first trade for the day. It was a very quick trap, you had to act quick, but this is a gorgeous two-legged pullback. Notice key entry points are holding price, and this is a simple price action, two-legged pullback, high probability setup. And notice market kept pushing higher, and you're not longer interested. It gets too stacked, and you're being patient. Now, prices turned down lower here and pushed below EMA, and this was already a little bit concerning, because you're not reaching new high for this initial uptrend. And at this point on, I drew my trailing range like this, just to get an idea. In case we're in a trailing range, you can find some resistance right at this area, and we turn down here and strongly push below EMA. So this may be a first sign that we may be in a trailing range. And notice you have a new low, first entry short, strong push above EMA, second entry short. I expected to get a failed second entry short because I expected new high for this uptrend working higher. It never came, and prices kept pushing lower. Now we're talking about trailing ranges. In trailing ranges, it is normal for prices to sometimes not create new extreme, because at the extremes, the other side is going to be so strong that the price will not may even get a chance to create new high. Everybody buying here, everybody selling here. In trailing ranges, you want to buy low, sell high. You need to resist the common sense that tells you want to keep buying after watching market go up, and you want to keep selling after watching market go down. You need to do the exact opposite and trust the price action rules. Also in trailing ranges, you're not looking for wider patterns, you're sticking to the shorter ones. Also, the last thing in trailing ranges, two-legged moves are powerful, and once you see two-legged move play out, you can potentially expect reversal. So we have a perfect example of this right here. We have a first leg down, pull back, second leg down. Market likes to move in pairs of twos. We confirmed the potential double bottom, and this is starting to look like a trend range. EMA flat, up and down consistently, and this is downtrend with the break and a new low. So you're expecting for prices to reverse from here, and you have a strong push above EMA. We have a high low here. We have a new high, first entry long, second entry long, high low. It is a decent entry, second entry long. The body is still a bit bearish. It's not a bad entry by any means. I will mark it as aggressive entry because it is not congested. It is a clean big move up. You're coming off the lows. It's just a little bit slightly more aggressive because you would expect to get felt second entry short, but decent entry overall. If you took this trade, you had the right idea. Now you have a break and new high, and you have a felt second entry short, but you have to go long above bearish bar, which you cannot do. And then you have this continuation of the felt second entry short, and you have to go long directly into highs. Now, even though this worked for a scalp, this was 9 ticks, so the 8 tick target profit would have been filled. You cannot go long once you have a break and new high that far from EMA with the body so close to resistance. You can get trapped. Here you barely got out, but it's already too late. You need to have set up closer to EMA with enough room to get out. Now you would expect for prices to go all the way down here. That never happened. EMA kept holding, which is indicating to me that there's not that many sellers just yet. So once I see EMA holding after this move down, something is telling me that I need to be a little bit more patient. For that reason, I'm not looking to sell just yet, but at the same time, I can't go long. I can't go long into triple top like this. I want to do the exact opposite. I just want to sell, but I need a proper opportunity to sell. Now, market strongly pushed below EMA, confirming bearish momentum, and this is what I want to see. Finally, momentum below EMA. I'm going to redraw the shortened downtrend because I need to follow the trend line rule right now, and I have a break of a trend line. And what do I expect? I expect to get new low for the downtrend, and I expect for prices to reach the support following the trend range rule. So not only I'm following the range rule, I'm following the trend line rule that needs new low as well. And we have new low form. I'm counting from the lows because I'm right now looking for shorts. First attempt to sell, little pullback, second entry short. Now this right here is a second entry short that is not close enough to EMA. But when I was watching this, I missed that this is also new high, first entry long, pullback, second entry long, failure. So this is a failure and a second entry short. So these are two high probability setups in one. And given all the structural reasons we mentioned, you expect for market to push lower. This is a decent high probability setup because you get two high probability setup in one. And notice price action is perfectly following the rules and you created new extreme. Now notice what you have. First leg down, pull back, second leg down to new extreme. So even though if you're not seeing it just yet, there are truly two-legged pullbacks inside of a two-legged pullbacks, and market likes to move in pairs of twos. And once you train your eyes to see it, the price action will make sense. Now, when I was watching this, we know according to trend range rule that most breakouts will fail. And another perfect example why this breakout failed and pulled back. When I was watching this, I saw this nicely fitting channel, which means I was a little bit hesitant to go long because this really fits so perfectly. I thought that we may potentially get a new low, but this is your mind playing tricks on you. This is your common sense, your rational mind forcing you to follow what you see and not playing the trend range rule, because in price action most breakouts will fail. So you need to resist the urge to look for downtrend while the prices are going down. No, you're at the support, so you're most likely going to pull back. I instantly deleted the downtrend once I saw this move up, because if this downtrend is valid, you're going to get a correction to EMA that is going to be weaker. You're going to get a lot of bars in between. You're going to get like a first entry short, pullback, second entry short. But once I saw this one clean big swift leg that managed to push above EMA, this told me that probably this is more likely we're coming from the trend range. We're coming from the failed breakout, back into trend range. So this is where I redrew this trend line and I play this as a two legs down. And right here, I'm looking for longs. I'm looking for failed second entry short. That never came because we already have a break, new high. We never get triggered above bullish bar for failed second entry short. Now we pushed lower and the support kept holding. Now, since I expect for prices to keep pushing higher, I'm going to redraw by the downtrend, by the uptrend. We have a new high, first entry long, second entry long. And notice support keeps holding consistently. And according to rules, I need to buy low. I have to resist the urge to look for sells when I'm at the bottom of the trading range. So this right here is a decent entry. I almost took this trade. It just didn't form too well, a little bit stacked. You didn't get triggered above this bar. It stalled. There's the inside bar here. So you don't want to enter this particularly. I'm marking this because next time you may not get a bar that will stall like this. You will get triggered above this bar right here. This is a second entry long off the lows. You expect new high for the wider uptrend. Decent entry. Now notice what we have. We have high low confirmation of this second entry long above EMA. You're coming off the lows. So it is telling you you're probably going to highs when you're bouncing off the supported trend range. But I was worried about this triple top because right now it's starting to look like there's a smaller trend range being formed at the bottom tier of the bigger trend range. So not the bad entry at all, but I think it's a little bit aggressive because look at these triple tops here. You're at the bottom of range. It is questionable, but not a bad entry, just not that I personally like. But if you took this trade, I can definitely see why, and you definitely didn't do that much wrong. You just a little bit more if it fits your style. Now notice price eventually pulled back down, and notice tested the resistance again. Now and this is important because right here this is establishing the smaller trend range inside of the bigger one, and you have one big leg down. And notice what you here you have, by the way, first leg up, second leg up, two legs to a new extreme, indicating it's time to sell. First leg up, first leg down, pull back, second leg down. So in trend ranges, try to look for these two-legged pullbacks. In tight trend ranges specifically, we have a break of a downtrend, new extreme form, telling me that it is okay to start buying. And this is what you do if you're inside of a structure that you're not confident in reading because it's too choppy. Just draw the short-term channels, and once you see any hint of a break in your extreme, just assume reversal. Don't try to force it. Don't try to look for too wide patterns. It will burn you most often than not. You're better off just sticking to the short-term ones because you guys can see the prices will just bounce from the extreme instantly. There will not be too much of a follow-through. Now this was my second trade for the day, and I like this. Notice the beautiful big bullish bar, second entry long, break new low, two legs down. I dropped my limit order further back down because this was a little bit risky, and eventually I managed to get out, rather instantly stopped, but I managed to push higher. Now when you're watching this hard right side, everything in your body is screaming to not go long here because you're watching the bearish bias overall against you. But you have to follow the price action rules and you have to disregard the common sense. For that reason, you want to buy low. Now we have a bearish imbalance. Notice upper half of this trend range is empty and we're failing to reach the top of the trend range. We're at the bottom tier. So why did I like going long here if we have bearish imbalance? It's because it's starting to look like a smaller trend range inside of this bigger one. And we have big double bottom here. Generally, when you have bearish imbalance, you have lower highs but static lows. But this low pushed too far down and managed to form a wide double bottom, which made me think that there's a potentially smaller trading range being formed. And you definitely don't want to go short at the very low like this. So I was really buying the lowest point in the market. So for that reason, even though there's a bearish imbalance, I'm mainly focusing on the new smaller trading range and I'm buying at the very lows. So I think this was decent entry to take a chance on. However, notice what happened. Price is strong and push up. Resistance keeps holding, which you expect for sellers to start selling. You don't want to keep going long. You have a new high, first entry long, pullback, second entry long, failure. This is a great failed second entry long, coming off the resistance. You expect for prices to reach the support, high probability setup, failed second entry long. Look at the great bearish signal bar and market is reversing lower. Once you bounce here and form a triple bottom, you forget about selling again because buyers will jump in the market most likely, and you're playing the probabilities, you're focusing on the rules, and you want to look for longs, new low formed, first entry short, pullback, second entry short. Since I expect reversal, I'm going to draw my trend line, and notice what we have. Failed second entry short, EMA keeps holding prices, trend line keeps holding prices, decent enough bullish reversal signal bar. This is a definitely great entry to take, and this one would have been just failure. It created that last little push down before eventually rallying up higher. So this one is frustrating. I definitely would have taken this if I wasn't done already after my two trades. So if you took this trade right here, you definitely followed the rules. There was just one little 2-bar push down before market eventually went exactly where you thought it was going to go. So a little bit unfortunate, but sometimes that happens in price action. You're playing the probabilities, and if you see a setup that looks good following the rules, you have to take the entry. Now market eventually kept pushing higher. Notice the trend range. So you have a break, you have a new high of this trend line telling you that it is okay now to look for shorts. But there's really not a great signal bar to fade the breakout. I'm not looking for wider pattern. I'm not looking for trend line like this, because this is too wide inside this trend range, and we're coming from the failed breakout, so I expect for prices to go down. So this trend line is not something I want to look at. I'm looking for prices to reverse back down. You have a new high, first entry long, second entry long failure, but this is above EMA, not really below. Had this close like this below EMA, this would have been great entry. And after that, there's really no great entry. I drew wider pattern because you're expecting for prices to go back down the trend range. You have a small little congestion, failed breakout, but horrible signal bar, no great entry. And at this point on, a new structure started. Now, when I was watching this, I had a bigger pattern like this just for the bias. But notice what happened. We completely disregarded it and we kept pushing lower. And this is no longer an overshoot. You can't even get back and test it. So this tells you that this is wrong, at least at this point on, and a new steeper trend is starting. So once that happened, I drew this steeper one and I was focusing on the bearish downtrend. Now, structure is bearish, so we expect to get second entry short at the EMA to like a pullback, and we expect to get a failed second entry long, because any second entry long that goes against the trend is considered to be trap. But everything needs to form at the EMA, and we didn't get any setup at the EMA. Every pullback at the EMA is just a first entry, and then you never pull back fully to EMA. I haven't seen this in a long time where you have such a massive move down without a great high probability setup, but you just have a bunch of first entries. Everything is so far from EMA. You never manage to pull back to EMA. Just not a great opportunity, and by the time market is already closing. So unfortunately, there's no opportunity for us to capitalize on the shorts down. No second entry short at the EMA, no high probability setup. Even if you can't find the proper channel at this point on, this is starting to look too bearish. So we definitely want to look for shorts, but just first entry. Unfortunately, no really great high probability setup. So even though this downtrend was really nice, it's unusual. You won't see this very often, but occasionally it can happen when there's just no high probability setup for us to take. So the entire day was basically a trend range. That's where you had to do most of your analysis, and you have to trust the rules and disregard the common sense. So I hope the video was helpful. I'm gonna wrap it up. I'm gonna see you guys in the next one. Take care, everybody.